Let's talk markets and some stocks to watch with Jenny Harrington, CEO and portfolio manager at Gilman Hill Asset Management, as well as a CNBC contributor, author of a new book, Dividend Investing, Dependable Income to Navigate All Market Environments. I was going to ask you about the overall snapback in the S&P. Do we go to new highs? Doesn't this market seem like it wants to go up? But everybody's looking for a possible test of the recent lows. Sounds just like 2023 and 2022 is what it sounds like to me. You know, you're going to hide behind individual stocks. That's what I would do if I were you.
I think
you have an overall market outlook?
Well, I always do. But you need to consider the source, right? I'm a dividend income manager. I'm always going to be apprehensive and cynical, which is why I like buying dividend stocks. So I'm always apprehensive. I'm always cynical. I'm also always all invested. But right now, you know, yesterday I spent the day at NAREIT, the National Association of Real Estate Investment Trust Conference. And even within that, you're looking at like the healthcare REITs. And you don't want to buy all the healthcare REITs. You want to buy two.
Some of them.
You know, within the semis, you don't want to buy all the semis. You want to buy one or two. So you're right. I am hiding behind individual stocks. And I don't know if it's hiding behind or it's just things are changing and it's the time for active management. But when you ask me about my overall view on the market, I don't really see how we go up much more from here. And that doesn't mean I'm wildly bullish. But I listened. Oh, yeah, sorry, bearish, thanks. I always say the wrong thing. But I was listening to your interview with Nick Timmerose. How many times did he say, I don't know, we don't know, there's no way to tell?
Is it ever not like that, or is it worse now?
I feel like it's a little, I don't know if the right word is worse, but it's more I don't know right now. And then Dr. Richardson, who you had on before, you know, hiring starting to show cracks. When you have those, how do you get past a 21, 22 times multiple? I don't know.
We're already, for a while, it looked pretty good. What did we get down to, 20 or 19?
19-ish, yeah. Maybe even 18 and change. So that's when I start to feel good, when the multiple's great. But then on the flip side, I don't really see what derails it. You know, I think earnings were good. Companies are doing well. The consumer is continuing to spend. So I don't see this nasty bear case.
Is this number that we're looking at, though, does that assume that the tariffs are going to be taken down substantially? That there will be agreements that are...
Are we de-escalating?
Are we inured? Are we inured? And we're just saying, who knows?
Assuming that these, you know, that the next 90 days doesn't come and you're dealing with 145%.
Yeah, I think it has to assume that it's nothing near the worst case scenario.
Right.
And it shouldn't be. That doesn't make any economic sense. It doesn't make any logical sense. Nobody wins. When I was in business school, we took this negotiations class, and they would talk about BATNA. It's a goofy thing. It's a better alternative to a negotiated agreement. But it basically makes you think about both sides and where both sides are coming from and what's the best outcome for both sides. The best outcome for both sides is not 50% and 145% tariffs.
What are you buying today?
Okay, I'll give you a couple ones. I really love Ryman Hospitality Properties. It's got a 4.5% yield, trades at about 13 times earnings. There's no tariff consequence. If a terrible recession were triggered, they're still fine. They own non-gaming conference centers and resorts, totally domestic. I like that.
All right, RHP.
Yeah. Another one, this is kind of funky. It's in our international strategy, but it's KB Bank. KB Bank is like the JP Morgan of South Korea. Trades at 6 times earnings, has a 5% yield. That economy is booming. You know, I think you can buy these. And by the way, there's no tariff exposure there either because it's all focused in Korea. So, yeah, so I like things that are out of the limelight. I like things where if we are in kind of a low return environment, that big dividend yield gives you at least some part of the return being very, very highly certain.
And it might be supportive as well. We would have gotten 3, but
I can go all day. You want like 30?
Yeah. No, we'll do that. We'll do that next time. We'll come back, but we've got to be out of here in about 20 seconds, I think. But Jenny, thank you.
Thanks for having me.